Because when it comes to the stock to flow line here, this stock to flow line is essentially the metronome for Bitcoin market cycles, and we tend to essentially upside deviate beyond this stock to flow line, but also downside deviate it below it, and also actually track and follow it closely. So if we look up across time, here we see a period of downside deviation below this stock to flow line, but then we see periods of upside deviating onto occasions in the 2013 cycle, and then in the bear market of 2014 we downside deviate below the stock to flow line, briefly track it and actually try to keep up with it, but then downside deviate with it below it, actually going to these new highs, and then at some point we tend to see a horizontal stock to flow line occur. Here we saw this horizontal line for the first time ever, because generally we were trying to flatten out here. For example, in this cycle we were really going vertically with this line, and then progressively with each cycle we see that it tries to flatten out into a more horizontal, and then you can see that this horizontal became pretty much flat in this cycle for the first time. And this has persisted also in the 2021 cycle. So when this flattening occurs, this is roughly when the Bitcoin halving pretty much occurs. And when we see upside deviation below that cycle, or at least this stock to flow line, we see upside deviation take us to the bull market peak ultimately. And so whenever we upside deviate below the stock, beyond the stock to flow line, there is a very certain amount of days that we spend there before we pull back into a bear market, and then ultimately deviate below the stock to flow line, and then repeat the cycle all over again before we're finally ready to follow the stock to flow line, deviate beyond it when it's horizontal, and then drop below it again to downside deviate, and so on and so on. So let's talk about this cycle then, because we downside deviated, developed this entire bear market structure here, general macro accumulation, and before the halving we actually saw these are the halvings essentially. So what I mentioned in terms of deviating beyond the horizontal line right over here, we actually have the halving impact that halving event essentially impacts and essentially forecasts that we're going to, within a few months after the halving, deviate beyond this horizontal line. So here we had the halving, and whenever we've had the halving we'd then go vertical and try and follow this vertical stock to flow line, and we've really tried to do that already here as well, but we are falling back a little bit. But in previous cycles, for example in this one, we were really tracking behind, we were falling behind, and then we upside deviated beyond the horizontal here. So let's put some figures into practice, because if we're focusing on the mid-February 2024 horizontal line, many people didn't think that we'd get back there. There was a little bit of doubt, especially when we were at 15.5k, FTX happened, and people were pretty much panicking, and there was extreme fear in the market. But of course we managed to upside deviate beyond this horizontal line right over here, and as it started to incline, we've been trying to track it as well. And historically, sometimes we track it while maintaining underneath this inclining stock to flow line, which is quite interesting. So generally, if we're to expect history to repeat itself, then we're going to continue to see upside from price action in an effort to try and track more closely this stock to flow line, and history is suggesting to us that we should be able to even overextend beyond the horizontal. But I'm going to talk about in this video why this is going to become increasingly problematic, because if we're focusing on current price levels, that's 167k where this stock to flow line is represented. That's the price it's representing, and we're currently around 100k or so. So this current stock to flow line at this moment represents to us 167k. And the thing about this stock to flow line is it's going to continue to incline and going to continuously represent higher and higher and higher prices. So at some point, we're not going to be able to catch up with that until we finally flatten in the stock to flow line. And in 2021, we were able to overextend beyond the inclining stock to flow line and even managed to upside deviate a little bit. But if you look at previous cycles here, so we've upside deviated beyond the stock to flow line quite considerably here, also quite considerably but lesser here. And if we look at this cycle here, then we've also upside deviated to a lesser extent right over here. And in this cycle, apologies, in this cycle, we've upside deviated beyond the horizontal again, a little bit less. And if we actually go and try do this against the inclining price action, or at least the inclining stock to flow line, then that price action deviation is also lesser once again, and even lesser once again here. So I think the moment we break beyond the stock to flow line here, let's say it's going to occur at 167k, then history suggests that we should see a lesser overextension, maybe even lesser than that, and then finally top out. But the problem is that we're starting to slowly get to some really crazy figures. So if history were to repeat itself, then to deviate beyond the horizontal stock to flow line, we'd need to rally to at least 400k, and that's starting to become a little bit problematic, because that would essentially mean that we need to continue rallying quite exponentially, and we might have to go against the laws of diminishing returns, which we see across cycles. Because think about it, if we look at price discovery phases going to 2017, then the moment we break beyond old all-time highs here, we experience a certain amount of growth. And the moment we break beyond old all-time highs in 2021, already we see that the bull market occurs a little bit sooner, or at least it occurs at a diminished rate of reward. So there is diminishing return. And if you look at this cycle also, we're not going to have a copy-paste scenario where we rally the same amount beyond old all-time highs into a fashion which replicates 2021 upside. So we're probably going to have to diminish that reward, and maybe diminish it even a little bit more. Because if we're focusing, for example, on this here, and then we compare that to 2021, then this is essentially a 50% reduction. So we had more than a 50% reduction in terms of reward. So if we're going to copy paste 2021 to this cycle, then this here is going to be a 50% reduction, which showcases to us still that we have upside yet to be enjoyed, even after a 50% reduction in line with the principle of diminishing returns. So we still have a bit more upside, but we still have to understand that diminishing rate of returns may continue to persist also in this cycle, which it means that we're going to still see more upside going forward in the cycle, but we're not going to see crazy, outlandish, outstanding targets that go against this diminishing rate of return, this principle that seems to be embedded in the price action for Bitcoin. And the same thing goes for when we look at the logarithmic growth curve channel. We tend to top out at the top of this channel. This has been the case at least in 2021, and we'll talk about that in a bit more detail. But the top of this channel represents the price actually of 157k. So the most we could see at this moment in the cycle is 157k. Of course, this logarithmic growth curve channel is a dynamic Fibonacci, so we're going to continue to see it inclining over time and over time. So maybe we get to 170, maybe a little bit over 170, but can you see how that becomes a little bit out of keep with 400k on the stock to flow model? So when it comes to the logarithmic growth curve channel, the best we can see here is getting to the top of that channel. But even if we look at previous bull cycles, yes, in 2021 we got to the top of the channel and topped out there. In 2017 we saw the top get to the top of the channel as well. The bull market top occurred at the very peak of the channel, but as you can see here in 2013 we actually missed the top of the channel. And in previous cycles before then, in around 2011, 2012 time, well, we got to the top of the channel. So out of the 1, 2, 3, 4 instances, we saw Bitcoin rally to the top of the logarithmic growth curve channel on 3 out of the 4 instances, barring 2013. So those are some pretty good odds that we will still get to the top of the channel here. Not picture perfect odds, because it is 3 out of 4, so that's a 75% chance that we get to the top of the channel here. But we have to also understand in some of the ways that we could fail and not get to that channel top. We have to always prepare and be a little bit pragmatic about maybe we get to this portion of the logarithmic growth curve channel. We don't get to the actual top, but maybe we top out a little bit just below it. That's something really to keep in mind when it comes to reasonable, level-headed analysis. But no matter how we slice it, it still means that 400k is a little bit outside this cycle. And I don't want to be bearish, and because I'm fundamentally bullish on Bitcoin, and over the coming cycles we'll probably get to 400k, we'll probably get to even beyond then, but it's going to take a few cycles. Really important to understand that this upside can and probably will get achieved, but not in this cycle alone. It will probably occur over the coming cycles.